growth is pointless if business can't navigate turbulent times. That's why we aim beyond the next quarter to power resilient business through the next quarter century, yielding new confidence in Africa's future and stronger sectors on her soil. So in this world of uncertainty, do you want a bank that talks sustainable growth or a bank that walks sustainable growth? See money differently. Nedbank Corporate and Investment Banking.
I'm Simon Brown. I'm here today at the Nedbank head offices in Sandton in Johannesburg. We're going to be talking sustainable finance solutions, relevance within the emerging market of sustainability, and the acceleration of corporate ESG in South Africa. We'll touch a bit in the rest of the continent as well. I suppose let's kick off with the first question. I want to come to you. How did sustainable finance originate within the local market, and particularly how's it evolving? Because I'm imagining just in the last year or two, there must be quite an acceleration in what's happening.
Yes, indeed. Thank you, Simon. Let me start with a definition of sustainable finance and what this really means. So sustainable finance is the intentional use and structuring of finance in a manner that would promote environmental, social, and/or governance outcomes. Now, sustainable finance and this concept, we can go back to 1992 in terms of how this has actually originated. There was an Earth Summit that took place in Rio de Janeiro, and effectively at this particular summit, it was identified that by transforming private finance, this can unlock a large amount of sustainable development. And that gave rise to the United Nations Environmental Programme Finance Initiative, which since then has been really driving the cause to get sustainability into mainstream finance. And that is how we have had the evolution in terms of products, in terms of services, and ultimately innovation that comes through to the market. But post that, and more recently in 2015, we've had the likes of the Sustainable Development Goals emerging, and we've also had the likes of the Paris Climate Accord around a similar time, again forming as framework catalysts to move these objectives forward. Here at Nedbank CIB, we have adopted a purpose to use our financial expertise to do good. This is actually part of Nedbank's wider purpose. And by focusing and structuring sustainable finance solutions, we have been able to stimulate the market, move this forward more, and that has given rise to the last few years where you've seen ESG-themed financing as a percentage of overall financing has grown quite nicely.
And I think the key point perhaps that you make, I think when we think ESG, we're going to think about, your stakeholders. We're going to think about, using less coal or whatever the case may be. Actually, it is that, but it's a lot more than just that. It's almost getting it into the DNA, such as where do you get your financing from? It's that complete thought process rather than just, here, and here. It is that entire thought process through.
100%. It's an overarching sustainability ethos and speaking through it throughout all your levers, whether that's your operations, whether that's through your mainstream initiatives and activities, depending on the industry that you're in, through your supply chain, through the stakeholders that you engage in. So it's an inward and an outward journey.
We get the benefit of ESG. No one debates that. But the benefit of actual sustainable financing. Are there tangible benefits for the parties?
Sustainable finance, and depending on which tool you use, ultimately it is there to communicate the sustainability strategy and commitments of the borrower. It does put the borrower or issuer on a very accountable path, because as part of these particular financing instruments, there are embedded measurements and reporting and impacts that need to come with it. And it's also a very transparent instrument. And investors like transparency. So when we look at combining these three things, communication, accountability, which leads into impact and transparency, this really allows for a robust form of a financing instrument, which has the potential to crowd in additional liquidity. It has the ability to attract alternative pools of capital, whether this be from dedicated ESG funds or traditional funds which are becoming more ESG conscious, as well as from developmental financial institutions. And it also has the ability to potentially enable some funders to go out longer in tenor and potentially attract some pricing attention in that particular financing arrangement.
In essence, we're getting almost a momentum building up, to your point. And as every time there's a new issuance, it sort of gathers that momentum and you get more interest and more demand for it. What I particularly liked was your point around commitment, where there's almost a tangible sense of, well, there are, for want of a bad phrase, some strings attached. And it keeps people, not that they're not honest, but keeps them on the straight and narrow.
Yes, it's just another tangible proof point. So whilst we can have a strategy and a will to do things, I think the financing and embedding sustainability into financing just takes it a step further to say, look, I've committed in my mainstream financing to meet these objectives, and it makes it more tangible and effectively deliverable. I think we're also starting to see there's various ESG methodologies that are being employed in terms of assessing counterparties from an ESG perspective and having more levers where ESG is embedded into an organization. This ultimately positions the company better from an overarching ESG score or an ESG rating as well. And that can have spillover impacts into things like cost of capital, as we see lenders and investors starting to embed their own ESG frameworks into assessing a counterparty.
This is an industry which is innovating because of it's so new. You mentioned 1992, and but that's still relatively new. We're learning as we go, in a sense, and adapting to what practically works and what practically benefits both the investors, the lenders, but of course the broader communities and stakeholders.
Yes, indeed. And the context is so important in the innovation. We have seen recently the Presidential Climate Commission framework that has been released in terms of the just transition. And we've also seen the just transition investment plan that has come out as well. Now, under the Presidential Climate Commission framework of just transition, there's been 4 sectors that have been highlighted that are key to address. That being coal, auto, agri, and tourism. And those particular supply chains are very important to address to ensure that we can remain competitive as a country and to mitigate any impacts that may be coming through from a result of this climate change transition and how our export trading partners are going to be behaving, etc. So what's very important for us when we innovate is to really take into account a number of factors, sustainability at the heart, but definitely ensure as well that how are we bringing the skilling part of this equation along with us. And there's an example we'll speak to a bit later where we've really looked at bringing together the financing, moving sustainability and mitigation forward, but also ensuring that we skill up in a manner that allows us to continue on this green economy and green trajectory without leaving people behind. And I think very important to that is how we mobilize the funding. How do we connect with different sources alongside commercial capital to ultimately at a systems level be able to bring down the costs of the transition, but at the same time create stakeholder value for all, so it's a win-win situation.
Is there almost a competitive edge? We spoke about the whole supply chain, right from the beginning to the factory, and then, of course, ultimately to the ultimate customer. Almost a competitive edge for an SME who's embracing. And I'm thinking, at the current, there's a BE scorecard, maybe almost an ESG scorecard, and it's maybe not quite the same as rigid, but if you've got those credentials, it helps you get your foot in the door and perhaps grow your business.
Yes, and I think if you look at the context of energy security that we currently find ourselves in, and that speaks a lot to the E and to sustainability in the sense that, in order to keep your operations going, you need to think through your business from an E, S, and G lens and formulate that ESG strategy and potentially engage advisors in formulating that ESG strategy if this is new to you. And the reason for that is it really does have an impact on the ability of your operations to continue, the ability to enhance your operations, and potentially open up new markets for you as well, if you look at the opportunity side of the equation. So whilst it serves as a risk mitigant from an opportunities perspective, adapting your business model can really assist you to lean into newer markets that the green transition could bring, whether that's to ensure that you're investing in newer technologies, which are more foolproof, but also from your customer of markets. How are your customers going to be viewing you from a sustainability perspective? If you look at the values-based ethos that has been driven as by the younger generation moving up, but also in terms of the effective investment philosophy on the other side. So really from your funding side and from your customer side, ensuring that you remain relevant to your markets, that can really help you as an ESG lever to continue to retain your business and grow your business.
Let's look at some of Nedbank's corporate investment bank and some of the roles that are happening in innovation and perhaps some examples of how you're operating in that space.
Sure. So as an investment bank, we play a key role across the green economy, whether that's through the financing that's been mobilized towards renewable energy projects, or through our wider financing activities where we're actually transforming this through the structures that we bring to the market and through our arrangement and solutions to ultimately move sustainability forward. I'll hone into one example where we arranged a 10 billion rand sustainable finance debt package for a mining company last year, which represents the largest sustainable finance transaction to come out of the South African market. And this was a multi-currency facility, so based in rands as well as US dollars. And part of this was structured as a green loan, where we have provided financing to our client to notionally exclusively finance phase 2 of the solar PV project, which is north of 130 megawatts in size. And the other portion of that project is the sustainability-linked loan component, whereby we worked with our client to calibrate sustainability key performance indicators and annual targets and embedded that into the facility. And this deals with two key themes in South Africa, the one being carbon emissions and the other being water savings. So that's what we have embedded into that package. We then arranged and coordinated that in the role of sustainability structure and coordinator, and effectively crowded in funding to ultimately get a successful debt funding package for the client. That is an innovation that we are quite proud of because it is quite significant in terms of the volume that it was able to attract, but it's also significant in terms of the heart of the KPIs that we've attached, which will serve to reduce pressure on the grid in the South African context. And it's also quite material in the context of the operation that we're looking at in terms of the impacts that are being made. The second innovation is that of a 1.09 billion rand green residential development bond, which we issued in 2021 as Nedbank. Now, the green residential development bond was unique in that it combines a few elements. The one is arranging the funding through the debt capital markets. The other is where we connected with the IFC, which formed part of our anchor investor, but also were able to effectively connect us further to a UK donor-sponsored program, where we are currently channeling that particular money to our residential property development clients, and we are able to cover the additional costs of green certification and effectively the greening elements of building green buildings. Now, this is quite impactful because building green has always been a barrier in this market, and this now allows us to incentivize these developers to build green through having mobilized with blend finance sources from the UK donor money into Nedbank as a trusted player. And the third element of this is around the training. So effectively, in order to build green, there is a standard called Excellence Design in Green Efficiency. And we needed to enable our property developers in South Africa to actually build this in according to these specs, and also upskill our staff in terms of what does this mean. So we're currently rolling our training program out on IFC Edge certification as well. So this really brings together three unique aspects, that is the blend financing from the donor money alongside capital market commercial investor money with the DFI money, as well as the training component. And this is a really good example of an innovation that we'd like to replicate in the South African market and can be replicated into other things like just transition.
Looking forward, I mean, this is a huge growth potential, not just for Nedbank in South Africa, for the rest of the continent and ultimately for planet Earth.
Yes, it is. And I think it's all about connecting the dots, and it's ensuring that we all share in this vision together. And it comes back to the point I think we started with at the beginning of this conversation, Simon, is that we are all at risk. So our value at risk, whether that be from a personal perspective, whether that be from a company perspective, whether it's the rich, whether it's the vulnerable, we are all in this together. We've got to ensure that we can move the path forward to decarbonize, and the science is quite clear. We've seen the latest findings of the latest intergovernmental IPCC report, and I don't think there's time to negotiate with the science. And effectively, what we need to do now is have all hands on deck, move this forward, and ultimately, create a more prosperous economy and society.
Yeah, and I'm going to leave it there. I think it was a great phrase, sharing the vision together. That perhaps is what it is. And I think if we, maybe it's a crazy dream, but in time, probably all debt is going to be some degree sustainable. And the idea of having unsustainable debt would just be like, you must be crazy. It's like using an old dial telephone. We'll leave that there. My name is Simon. We're coming to you from the Nedbank offices in Johannesburg, Sandton.
Growth is pointless if business can't navigate turbulent times. That's why we aim beyond the next quarter to power resilient business through the next quarter century, yielding new confidence in Africa's future and stronger sectors on her soil. So in this world of uncertainty, do you want a bank that talks sustainable growth or a bank that walks sustainable growth? See money differently. Nedbank Corporate and Investment Banking.